episode of Copper Bottomed. I haven't done one of these for a couple of months, since the first week in May, and I had this presentation all ready to go last week, and then I hit a snag on my internet, and I've only just sorted it out. So some of the data is a week out of date, but I think it's pretty much there. So straight into it, got lots to cover. There's been a pretty exciting time in the copper market for the last couple of months. So let's get straight into it. Okay, here on this slide, you can see my usual favorite charts. I've got the 25-year copper price history here, bottom left. This is the copper price going from $1 a pound in 2000 to around $4.40, which is $4.40 per pound on the LME as it is today. The middle chart here shows that over the same time period, so 25 years, the relation more or less between copper and gold. And you can see that they broadly trade in line. You sometimes get these periods of different prices for a period. And we're at a time here where the gold price is strong relative to the copper price. And you would expect over time that those two could converge. And since I am a believer in the fundamentals of the gold price, which is that all the central banks are still buying gold and the dollar is weak, I don't expect the gold price to fall significantly. Obviously, there's a degree of volatility which it will always be there. So you'll have some down days and some down months. But fundamentally, I believe that the copper price is going to close that gap with the gold price. So if you look over the long term, over the last 25 years, the real copper price in terms of copper divided by gold, actually since 2011 onwards, we've had copper demand growth, which has been sub-trend. And now, of course, the predictions are that we're going to be coming back to a kind of a period of above trend growth in copper demand with all of the electrification thematics going on and the kind of modernization thematics of and AI and electric vehicles and such and so forth. Plus, of course, we've got the dearth of the dearth of new projects, new supplies, even though there has been, of course, good copper supply from brownfields expansions. Right. Look at the other charts on this slide. This is from January 2024, showing LME stocks in blue. And what's interesting is the Trump tariffs and what has that done to the LME price, which is not much, but what has it done to LME stocks? You can see the declining stocks here and the arbitrage. So this is the price spread between the COMEX and the London Metal Exchange. You can see that the trend is normally in cents per pound. It's normally something like 10 cents per pound is the kind of the median, or even less, 6 or 7 cents per pound is the median arbitrage between the two. But right now it's just shot out to whatever that is, 70 or 80 cents per pound. So a huge price difference between the American, kind of the US copper for delivery versus the London. And what you've seen is just stocks shifting to the US. Fundamental demand, supply and demand hasn't really been affected. It's just the location of it. If you look at the stock decline from last year, which looked like a real kind of demand-driven stock decline, there was an associated metal price increase. This year, the stock decrease is just an arbitrage influence, and you can see that the metal price hasn't really changed. Yes, there's a bit of a rise, but fundamentally for the last 6 months, it hasn't really changed. So there we go. So in short, the Trump tariffs is a bit of a storm in a teacup. It's just shifting some of the stocks around at the level. But let's have a look at what the longer term impacts might be. It's worth looking at the data from the US. This slide carries the data prepared by the USGS in their mineral commodity summaries for copper. And this came out in January 2025 with kind of rough figures for 2024. And what it shows you is that the mined production is about 1.1 million tons, but there's only space for refined 850,000 tons. Okay, which means that just under 300,000 tons, let's call it 250,000 tons, of the mined material can't go through the local refineries. So it has to be exports. And so if you look at here, ore and exports ore and concentrates which are exported, there's about 320,000 tons, and that is because there isn't enough refining and smelting capacity in the US. So if you go to the consumption, apparent primary refined copper and copper from old scrap, it's around 1.8 million tons, 1.8 to 2 million tons probably is by now, which means that you've got to import 800,000 tons of refined copper to go with the whatever it is 900,000 tons of refined copper that you actually can do internally. So when you look at the impact of the Trump tariffs and what's the permitting going to be doing about if there are any changes or streamlining to the permits in the US for production, it's not actually going to lead to more refined copper being produced in the US because you've only got refining capacity or smelting capacity of 900,000 tons. So what you're going to have to do is you're going to have to export it to places where there's smelting capacity. And where is that? China. Okay, because China's just done this huge build out of smelters. It's got over 50% of the smelting capacity globally now. So it doesn't get away from the fact that any project in the States has to be able to compete on an international basis. You're not going to get a higher copper price in the States because the smelting capacity is overseas, and you're not going to build a new smelter in the States unless you've got guaranteed supply of lots of material. You've got 320,000 tons here, which might not, the smelter has to be cost competitive. It has to be cheaper to run than the ones in China. And you probably want more supply than that on a guaranteed basis going ahead. So it's pretty tricky. Anyway, so I thought that was quite interesting. When I was researching the topic, I came across this presentation by Hudbay on slide 28. They talk about the US open pit copper benchmarking. And I found this interesting. There are kind of 11 open pit mines. These are the largest ones. Morenci at 260,000 tons and down to Ray at 41,000 tons. But crucially, look at the grades. So it's 0.5, 0.49% for the smallest one and 0.23% for the largest ones. So these are large assets. Kind of, they're quite mature, quite low grade. I just thought that was quite interesting as well. And of course, Hudbay have got their Copper World project that they hope will be coming into production in the coming years. So remember that the average grade of mines globally is probably 0.45% at the moment, and it looks as if the average grade of these open pit mines in the States, if you do it on a weighted average basis, it's going to be somewhere below 40. It might be around 0.35% copper. Right. Another thing which is really crucially important to understand about the US pipeline of opportunity is exploration is crucial to get your maturation, your mature pipeline of projects coming through. You have to be able to explore and efficiently. Cherie Leiden from Envy Resources, which is a kind of a project generator company. Cherie Leiden's done this fantastic presentation on the challenges and obstacles to exploration in the US, and the two principal areas. One is a lack of data, so there's no central repository of data, and the government isn't getting out there and doing large-scale geophysical and geochemical surveys to kind of provide or stimulate investment. So that would be a really good thing to happen. And the other crucial aspect is that you have to get a plan of operations, an environmental assessment, an EIA if you're going to disturb more than 5 acres of ground on BML land, and straight away if you're going into forestry service land. And just to be clear, those plan of operations, that environmental assessment takes a few years. You've got to do kind of flora and fauna assessments, you've got to do archaeological, and you've got to do the public consultation and environmental review. It's a very expensive, cumbersome, time-consuming thing, and no exploration company, which is of kind of the mid-tier or lower, or smaller, the junior companies are going to be able to afford to do this or want to do this. So yes, there's exploration dollars being spent in the States, but it's all being done by brownfields or these big companies around their existing infrastructure. So lots to review and lots to reform within the US. So it needs a new smelter, it needs or two, it needs a new sharing of data, because there's no point. Well, it's very inefficient to have companies just holding onto their data and not sharing it publicly. And it'd be great to have the government sharing data. And 5 acres before you need to do a plan of operations is just nuts. So exploration in the US is quite tricky. Right. Moving on, still staying with the macro, I think it's worth mentioning that the demand story, even though metal prices, the copper price hasn't really moved a huge amount, there are these kind of large scale, slow moving demand drivers which are in play at the moment, which are going to be in play for many, many years to come. And here's a piece from the FT from last week or the week before. The Netherlands rations electricity to ease power grid stresses. More than 11,900 businesses are waiting for electricity network connections. It's just nuts. Although the bottlenecks in the Netherlands are acute, it's a harbinger of what's likely to occur in other EU countries as the speed of electrification increases to meet the bloc's ambitious decarbonisation targets. It's not just decarbonisation. Look, here we go. Jeroen Dijsselbloem, the mayor of Eindhoven, says everything is going electric and electricity infrastructure needs to grow massively everywhere. We need more than 100 medium-sized substations and 4,000 small substations and 28,000 technicians to install the necessary infrastructure. So people skills and copper. People skills and copper. These are long-term, powerful demand drivers. Right. Before I get into the exploration stuff, a few points about positive permitting and licensing news out of South America. I'm not going to talk about Mexico, which is quite anti-mining, it seems. No new licenses there. Not much appetite for open pit, or Colombia. But in Argentina and in Chile, there is some good news. So on the 1st of July, Chile's Congress passed groundbreaking legislation that promises to revolutionize the country's mining and energy sector approval processes. The reforms modify over 40 industry regulations with a clear goal to slash bureaucratic red tape in one of the world's most mineral-rich nations. At the heart is a commitment to reduce processing times, a transformative change for a system where mining projects previously faced approval timelines stretching up to 12 years. Obviously, the more sensitive the area that you are trying to get permits for, the more the higher altitude, the closer to the headwaters, the closer to the glaciers and all of that stuff up in the national parks and the Andes, the harder it was to get. But of course, if you're down in the on a brownfield site in the desert in the Atacama, it's probably much easier. Nevertheless, the reform's primary focus is dismantling the labyrinthine approval system that has deterred billions in potential investment. They're trying to create a streamlined permitting process for mining and energy projects without compromising environmental oversight. And the economy minister, Nicholas Grau, is trying to drastically shorten licensing timelines while maintaining regulatory rigor. So go Chile. And across the border, not to be outdone, Argentina introduced changes to its mining policy and amend 2 key sector laws by decree, one of which is the mining investment law, and the other one is linked to the data through the National Geological Information Bank. The most visible change is the simplification of the procedure by which companies validate past and projected investments. The process previously required over 1,000 data fields in the form, many of which lacked legal backing, i.e. you were asked to fill in forms which weren't necessarily in line with the mining code. So now they're trying to find a kind of a single port where you can just kind of do all of your, where you can just complete one form instead of many. Right, so go Argentina, go Chile. I would say that one of the key differences, even though both governments are trying to and are reforming the approach to mining, the key advantage that Chile has got is that the people understand it. It's known to be a copper is kind of the arterial system. It's the lifeblood of the Chilean economy, whereas if you spend time in Argentina, it's still quite ranch-based. It's still quite agricultural. Its exports are beef and grain and wine, and it hasn't got that mining mindset. So you might get governmental support, but at the local level, you've still got lots of distrust and a lack of understanding, whereas Chile's got the combined advantages of lots of copper, the government supporting you, and the community supporting you, or the community basically understanding what it's all about. Not always and not in all places, but as a general rule. Right, on we go. Many companies have reported good copper intercepts over the last couple of months. I can't talk about them all. I'm just going to talk about a few of them. I've pulled up a couple of price charts as points of interest. I will talk about so these are weekly reports. I will talk about Foran separately. Cisco Metals, I'll also talk about that separately. Firefly, I've spoken about that before. They hit 26 meters at 5.10% copper equivalent. Their share price when they took over the project was in the doldrums, but it's kind of been rising for the last couple of years. They've got a great asset, and they're continuing to do good work. It's a classic brownfields, get in there and do the geology. Surge Copper has been in the news quite a lot. I've seen a few headlines coming through. I haven't followed it closely. I saw 184 meters at 0.3. I think the financing that they've done has, and possibly some geological results, has caused a bit of a pop in the share price, but effectively it's been a 5-year drag, really. So keep going, Surge, not quite there yet. Faraday Copper, these guys are doing excellent work. They've had this lovely little pop in the last couple of months, and that I'm pretty sure is linked to the Trump tariffs. Obviously, if they can produce oxide copper, then you won't worry about the need to refine, because you'll be able to produce your own refined cathodes from your SXEW plant. They're on a 2 or 3 year, or actually multi-year price gain. They're doing really well, and even though some of their drill results are of quite low grade, they're obviously onto something good there. I was impressed when I met with them at PDAC in Toronto. Right, next, moving on to the 19th of May. These are the weekly best. NGX, oh my goodness, look at that. I'll talk about them separately. Pampa Metals, here we go, $26 million. The market doesn't seem to love it. I question the corporate structure. I can't remember exactly what it is, but they haven't got 100% title on it. And of course, there's plenty of enargite in here. This is the other side of the Aldebaran Altar system on the Puquenes deposit. It's thousands of miles from the Atlantic. Weird corporate structure, arsenic-rich ore. Perhaps that's why it's still languishing at $26 million market cap. Hot Chili, they continue to put out good results. However, the market continues to say, we don't believe you. We don't think you guys can turn this into a mine. A couple of directors left. Obviously, the chairman and an NED obviously tried to have a board spill. They got rebuffed and they left without the changes happening that the market seems to want. So Hot Chili seems to be stuck in a rut. Right, who else? Crux, 572 meters, a big old intersect of 0.33% copper. Great result, that. Really good result. Crux Copper, it was the old, it's the Habe deposit. I can't remember the name of the company beforehand. It's a company change, but they've also brought in Hea Dawn, who's a class act. He sold Orsino to the Chinese for $300 or $400 million, or possibly more. Great job there. And I think this re-rate is the fact that Hea Dawn has come on board, and they're into the into the weeds of re-drilling something that's been well known and drilled since the 1980s, or if possibly even earlier. So every man and his grandson has had a look at this Haib deposit, which is low grade. I don't think there's any way you can kind of repackage that as anything other than low grade. Having said that, obviously in a secular bull market, if the copper price takes off, then something which has got a lot of leverage to gold, low grade, like Crux, like the Haib deposit, that will do well. But you pick your battles. Right, what else? I put in the Gladiator Metals chart here. They got 10.5 meters at 5% copper. If you go and look at the geology of that system, I really like it. It's a skarn. They've got copper. They've got moly. I think they just report straight copper, but there'll be moly credits on this. And I think they've also got some gold as well. Nice share price chart, very blocky and not trading at all. And then in the last 2 years, it's been picking up liquidity and also picking up interest. They're well cashed up. They've got multiple drill rigs turning. Gladiator Metals. They're in the Yukon, which has its pluses and minuses. Pluses is that it's kind of a low risk country and everybody loves Canada. Isn't that great? Not so great is that in the Yukon, the Eagle mine had the heap leach dump. The heap leach collapsed last year, and now everybody is up in arms about it, rightly so. But it means that they've got the government right over their shoulder. Up in the Yukon, almost everybody is employed by the government, so it's going to be slow getting permits for them. However, it's a brownfield site, it's a mining area. They should be fine, but it's don't expect them to do it faster than anybody else in the world. Right, next page. ATEX, another kilometer of good copper grade equivalent. I'll talk about them separately. Magna Mining, 30 meters at 3%. Wow, I met these guys last year at a little boutique conference in Italy, and they were super impressive, really no frills. And look what they've done. 2 years, taking that share price, they've just done a fantastic job. They brought this into production. They got a market cap of $346 million Canadian. Class act, no frills, get mining, tick. Everything you could possibly like about a exploration turning into a development company and production company. Right, what else have we got here? Cisco is going to be talking about. NGX is going to be talking about. Aldebaran. Here we go. Look at that share price. Don't you love that? These guys are doing a really good job. It's the Altar deposit in Argentina. The better grades are quite deep. It's got quite a lot of enargite, which is an arsenic mineral. They've pulled in Newton, the proprietary technology arm of Rio Tinto, to potentially unlock the mineralization without unlocking the arsenic trioxides or triggering arsenic trioxides. They're well backed. Kevin Heather and John Black are superb at marketing and geology and running companies. I'm looking forward to seeing the results of that Newton test work, and I hope that it works. Benton, here we go. I've covered Benton quite a lot over the last couple of years. They're still plugging away, 12 meters at 3% equivalent at the burnt deposit. But if you look at their market cap, you can see the market doesn't trust the strategy, doesn't necessarily believe the scale is there. $14 million market cap. It's really hard to win the trust of the market if you don't have the trust of the market. Right, what else? Moving on to the week of the 23rd of June, the best result was put out by Copper Giant, the ex-Libero guys. I don't know why they changed the name, but they did. 489 meters at 0.45% equivalent. Good result. And then I remembered from the paper that I've been reading, Geochemical Perspectives, published whatever it was 15 months ago by Dick Silito, Metallurgy and Mineral Exploration, Some Personal Reminiscences. What a great paper. Lots of geology, lots of fantastic stories. And he wrote about Macoa, perhaps the toughest field assignments I have ever undertaken. and I just thought of Colombia and that comment, and I just thought next. Right, and so on we go. Early July, ATEX, again, I'm going to cover them. Who else? Meridian. Here we go. Look at that. Up and down, and up. The last 7 months since the start of the year has just been an upward journey from whatever that is. 35, maybe 40 cents up to 70 odd cents now. They just put out a feasibility study, $984 million US, close to $1 billion NPV5. I prefer to see these things at higher discount rates, really, but people put them in at NPV5, and so they say, well, other people are doing it at NPV5, so I'm going to put it in at NPV5. And if you look at their market cap, you can see that they're trading in US at about an 80% discount to NPV. Lovely high IRR here, but that discount to NPV is quite harsh. What's good, though, is that the market cap is not that far away from the initial capex that is required. If you look down here, the initial capex is $248 million, so really not that far from its market cap. So the market cap to capex ratio is quite close, which is a good thing. And you would expect that as they work through the feasibility phase and they do more exploration drilling, that you will close that discount to NPV. So eventually you want to be, by the time you get to feasibility study, ideally at around 60 to 70, maybe 75% of that NPV figure. So lots of unlocking of value to be done there, that is for sure. Now, in those lists, I couldn't see one particular company, which was Fitzroy Minerals. But if you go, if you look at the Rock report, which showed that all markets first half of 2025 best copper drill intercepts, there we are, Fitzroy Minerals with 110 meters at 1.94. But right at the top of, I'll come on to that. But right at the top of that is Entree Resources with 552 meters at 2.3% copper. Great share price. I first looked at this company a couple of years ago and I liked it, and I'm happy to say it's doing really well. Interestingly, Rio Tinto turned around and said, the Mongolian government's still being tricky. We're not going to advance with the development that we thought we were going to advance with, and Entree Resources are going to be kind of sidelined. There was a bit of a wobble on the share price, but it stabilized. So it looks as if, I haven't looked into this, I don't know enough about the detail, but from the share price action alone, it would tell you that the lift 1 and lift 2, which are going to be have the impact on Entree, are still going ahead. So that share price trajectory should stay intact. Right, so I will talk about Fitzroy, but when I go through the companies one by one, I'm going to do it by market cap order. And of course, the largest and the greatest of them all is NGX Minerals. My goodness, look at that share price chart. Absolutely fantastic value delivery. $3.5 billion Canadian, $2.6 billion US. News release from July the 8th. I mean, just look at these things. Hole 46, 105 meters, 3% copper, 15 grams gold. Wow. And hole 44, 50 meters, 51 meters at 11% copper equivalent. Now, when I looked at hole 44 here, it comes down through the south here, it looks as if it's kind of quite oblique to this Saturn lens, which is more or less north-south, and this drill hole is also more or less north-south. But it only intersected 50.5 meters, so it's a bit curious about that. And if you look at this hole, hole 46, it intersected 105 meters across it. So I need to understand more about those geometries, just because looking at it, it doesn't seem to make sense. Never mind, if you just look at what Wojciech said, the president and CEO, he says the discovery of ultra-high grade free gold in quartz veins adds an entirely new dimension to the Lunahuasi project. Yeah, I mean, it's not quite entirely new, because if you go back to that Dick Silito paper, he's actually talking about telescoping already at Lunahuasi. But anyway, high-grade gold quartz veins are a well-known component of the high sulfidation epithermal deposit model and have proven to be a successful part of projects on this style of deposit, such as El Indio. We've got some outstanding gold grades. Seeing this new style of mineralization with these grades provides us with the possibility of outlining substantial value in a gold-dominant style of mineralization, further increasing the potential of what is already a great mineral deposit. Well, I mean, if you've got 105 meters at 15 grams gold, that is value add. So he goes on to say, we are still in the early stages of exploring this remarkable deposit, continue to get positive surprises as we add drill holes to the Lunahuasi project, and we believe that there will be more discoveries to come. So expect that share price to continue to grow. I still think it's difficult for an elephant to gallop, but these are safe hands you're in here with NGX. Right, Foran Mining. What an interesting company. Look at this, $1.45 billion value, $1 billion US. This is their news screen from February through to July. They are doing a good job of leavening, mixing in construction progress, one there, with exploration results. Tesla further drilling, further growth at McIlvenna Bay, Tesla zone, highest grade thickness intercepts to date, further thick intervals of mineralization at Tesla. Lots of good stuff with financing news. The share price is kind of rolled over a bit. The company, I think, is probably finding itself in the boring and difficult business of building a mine and construction. And it's actually very hard to find any numbers about what they're going to be doing. I looked and I was trying to work out where and what was going to be produced and when. Almost impossible. I ended up having to download the technical report, and even then that was quite tricky to find. I found eventually that it was a 1.8 million ton per annum plant, and it's going to be producing processing ore of around 2.5% copper equivalent with about an 80% recovery. So for me, that's around 35,000 tons of copper equivalent. And the pre-production capex is 700 million Canadian, which puts the annual ton of production at around $20,000 per ton of installed capacity, or per ton of annual production, which is quite high. But also it's not that low. If you put it into US terms, we're talking about $15,000 per ton. When you look at what Rio Tinto is doing with Kennecott, I think it's around $12,000 a ton additional production. This is off quite a small production base, though. This is probably about 35,000 tons per annum copper equivalent. It's about 20,000 tons of copper, if I'm not mistaken, maybe 15,000 or 17,000 tons of actual copper. So it's actually quite a small mine, but look at that. The valuation is there. And when you put in the full capex, including the sustaining capex, you're likely to push this up to something like $27,000 or $28,000 per ton of annual production. It's really interesting. This is what it costs to develop a mine. So I think they're going to continue to struggle to get that share price up. It's interesting that there's so little information about their actual production. It's very well marketed. Let's see how that goes. Right, the next largest company in this list, of course, is Marr-Johnson. I say of course, but look at the share price, basically $5 to $10 in a month or so. So that was a $400 million company a month ago, and now we're looking at $800 million US. Of course, this was all driven by the stimulus was new drilling at Pampa Medina. It was one of the longest news releases I've ever come across. I had to cut it right down to get it onto this page. I had to take out all of the detail, but actually the numbers are here. So, if you're looking for the 6 meters at 12%, here it is in the primary sulfide manto. But let's read what they had to say, because it's quite revealing. Significant high-grade sediment-hosted copper sulfide and oxide intersections materially extend Pampa Medina in all directions. Low altitude, close to the Marr-Johnson oxide deposit in a flat Pampa Valley within the Atacama. They've intersected ultra-high-grade bornite chalcopyrite, disseminated chalcopyrite, and high-grade oxide mineralization in a regionally extensive system of interbedded sedimentary rocks. Look at the scale of this. I mean, this is kind of over 1 kilometer. These are big thicknesses here. This is 132 meters. That's 68 meters in here. This is going to be a large lump of mineralized rock. The company's added a second diamond drill rig at Pampa Medina and has budgeted a 14-hole follow-up program targeting extensions and delineation of the mineralized manto. So here we are. This is at whatever that is, 1250. It's going down to 650. So these are 600-meter holes. These are kind of quite punchy holes. And this one is whatever that is, a 800-meter hole. So lots more drilling. The previously announced PEA for Pampa Medina will be paused. So they had a PEA for this area, which is going to be paused. But the feasibility study for MOD, the oxide deposit, is near complete and undergoing final review and will be released to the market in the near term. As it happens, I thought that this part, the oxide portion of Pampa Medina and the MOD deposit, was going to drive the value to $1 billion to $2 billion. This is just kind of given it a bit of a rocket boost. So well done, Hayden and Sergio, the guys leading that, and Nico as well. Well done, Marimaca. Well done, shareholders, for sticking with it and keep going. I think it's going to be a hell of a ride. Right, ATEX. Another Chilean success story. Look at that for a share price chart. Got to like that. I could have picked any of their drill news releases, really reporting on this exploration phase. Their market cap's 600 Canadian, 400-ish US. ATEX intersects 104 meters of 1% copper equivalent within 570 meters of 0.9%. Really nice. Really nice. And this is just from the July the 8th. You can go back and pick any number of them. I think the key thing is that you've got 1.4 kilometers at this kind of above 0.3% in this porphyry shell here. This is the copper gold porphyry. In the blue, you've got this B2B breccia. This is 500 meters by, let's call it 100 to 200 meters there. And that is got good grades in it. We're talking 1 to 2%, including in this section here, 126 meters at 2% in this portion here. So really, I think, speaking to Ben, as I have done recently, they're looking at this as being the start of the block cave. You use that to pay for your capex, and then this gives you the, whatever it is, the 10, 20, 30-year mine life, which kind of comes afterwards. And it doesn't really matter that you're a kilometer below the surface. This used to be the beef about Valeriano, but actually now that you've got this mineralization, and it's not far, when you think about this in 3 dimensions with the incised valleys off to the side, actually you can come in horizontally to access this B2B breccia. So go ATEX, and well done, Ben and team. Right, next largest, I'm down to $200 million US, Cisco Metals. Haven't they done well? They bought the Gaspé low-grade, tired old past-producing asset in July 2023, so 2 years ago, and the market took a while to work out what was going on, and when they realized what they had, look at this, got a lovely share price re-rate. Interesting is that if you look at what the company is, they say the company is focused on resource expansion on the Gaspé copper system with current indicated mineral resources of 824 million tons at 0.34% copper equivalent. So it's marginal, although there will be infrastructure, sunk costs, and existing infrastructure that can be leveraged there. What I found interesting about this was that it's this orange line is or the yellow line is their porphyry intrusion. Sorry, this yellow line is the 2024 MRE pit shell, and the existing mineralization is associated with a porphyry intrusion. If you look at the geology of this image here, down here, this line here, and this pink is central and extension, or central and east zone skarn marble horizons. So these are skarn. This is skarn mineralization. So question marks about metallurgy, about mineralogy, and about the relevance of these extensional, this new drilling off to the side. Is it going to make a material difference to the MRE? The market seems to think so. Well done, team, for doing this work. Onwards and upwards. These are some of these are good grades. I mean, look at this one: 108 meters at 0.84% copper. You know, that's a really good result. It's quite deep. There's some gaps in the mineralization here. What is the metallurgy of this skarn horizon? It's interesting that some of this has come into the pit. So I'd like to learn more about this, really. I'd like to learn more about the deposit. I don't think it's going to be necessarily easy, but certainly interesting. Right. Look at this. Fitzroy Minerals. That's us. That's me. Nice share price chart. I've only got it going back 2 years because we changed the name at the beginning of 2024. Just on Yahoo Finance, it doesn't really cope with that. But we're going very much in the right direction. The good drill result that we reported in early June was at the Buen Retiro project, which is in the Atacama, 110 meters at 1.94% copper. That's a belter of an intercept. It's on these subvertical IOCGs here, IOCG style oxide mineralization. What can I say? I mean, it's just it's a really good intercept with really good grade. It's on this anomaly and this lens down here. This is a kind of that trace of a mag anomaly, and if you extend this one to the southeast and this south area, if you extend that due south, it forms a V there. V for victory. It's what we hope it will be. There's a nice big mag anomaly underneath here as well, kind of a deeper circular mag anomaly. We're certainly tapping into this. The hole 22 is this one here. Prior holes was 24 meters at 1.3%, slightly narrow in there. But if you come down to these holes, this is 137 meters at 0.45, and then the next one along is 135 meters at 0.73, and it feels as if this is open to the south here. So really exciting. We, of course, have got very good infrastructure. There are roads that cross. This is a public road through here that crosses the north of license area, and we've got the Panamanian Highway just through here. We're close to Copiapó, and we are very much thinking about a possible route to early stage production, even though we haven't got resources. Even though we haven't got tonnages and metallurgy worked out, there are enough indications for us to start those internal processes of saying, okay, if we want to get into production in 3, 4, or 5 years, what do we need to do? And it's really helpful that a lot of these target minerals that we've seen here look like eminently leachable green copper oxides, tenorite, cooperite, and chalcocite. And that salt preparation in Chile is it's called it's a chloride leach. You mix the sulfuric acid with salt, and you get this very oxidative solution, which can break down the lattice or the kind of the crystal structure of chalcocite and make it leachable, along with native copper and a whole bunch of other minerals. Right. So go Fitzroy. That's us. I'll say very briefly that we're just starting we're about to start an RC program in this northern area, and we're continuing to drill out these targets and regional targets. So we've got a lot of drilling happening this year, lots of catalysts coming. Right, on to Intrepid Minerals Corp. I didn't know anything about this company. I still don't know much. I just saw this headline. I thought 216 meters at 0.7% copper with gold from surface in Arizona. I thought, wow, look at that. And then I looked at the share price chart and I thought, oh, a bit blocky. Obviously improving recently. Perhaps this is Trump tariffs. Market cap, very small. Micro cap. I thought, oh, is this interesting? But then I started to think, oh, I can't quite understand this, because they talk about 217 meters at 0.7 from close to surface. But when I look at this and I look at the key down here, if you're going to get 217 meters on average at 0.7, you need to have quite a lot of it at a good grade. And it does look as if this is above 0.5. The purple is kind of 0.5. So maybe this half of the core runs whatever it is, close to 0.5 or 0.6 or 0.7. But this upper portion, maybe that's the first intercept at 29, but this looks pretty skinny down here. So It's quite tricky. And they also talk about clear signs of a transition towards copper, gold, porphyry style systems. And it reinforces Ringo's potential as a shallow, bulk mineable porphyry target, just one of several newly identified porphyry centers within our rapidly advancing exploration program at Coral. It seems to me as if they're just trying to get the word porphyry in there as many times as possible. But when I look at the legend here, the blue here, this light blue, this is the Cambrian limestone. And if you look at that, this mineralized shape and some of these, presumably these are kind of grade contours on top of the geology, it doesn't look like the geometry of a porphyry. It looks more like the geometry of a skarn or something like that. And if you see the limestone there, you think, well, hey, we're definitely in, and the Paleozoic limestone and the Cambrian limestone, you think, okay, what's going on here? And the massive magnetite, that smacks a bit of skarns. But when you go to the website, it's talking about carbonate replacement geology. So I just thought, oh, that's curious. So I'd like to have more information, please. I wasn't convinced by what was going on there. And that, dear listener, is the end. That is that. I will endeavor to do this once a month so that the episodes are shorter and more concise for your delectation. But for now, I'm off to go and drill some more copper, both at Caballos and at Buen Retiro for Fitzroy Minerals. So catch you later. Thank you.